So what we're going to do in today's video, we're going to talk a little bit about what you need to do before you start investing. We're going to talk about where are the platforms that you can invest on. And then we're going to get into what are the stocks that are out there for you to invest in, because there are different types and you need to know about all of them. Hey, welcome back to Money Talks, and today we're going to talk about investing, and we're going to talk about it from a perspective on a high level. We don't really want to get too in-depth on a more complex level, because this is more so for beginning investors or someone that investing is new to and they're trying to get more comfortable, because we want to make sure that you can make safe investments and continue to invest towards your goal.
I'm going to get really close to you right now because this is something I want you to pay attention to. Before you invest, you must take care of at least these two things. One, paying your debt down or off completely. Two, you must set up an emergency fund. You have to have at least 6 months of expenses set aside, and I'm this close because I want you to know it's important.
We have all-time low interest rates. So you're not earning nearly as much as you were on your savings accounts or money market accounts that you did in the past. So the stock market is the place where people are going now to get that growth. And now that you have more people interested in it and aware of it, they're realizing that that's a place that I could put my money to work and grow and create wealth, which is fantastic. Let's be honest. How many people do you know got rich from putting their money in a savings account? I'll wait. Exactly. The answer is none. One of the reasons I prefer stock investing as a way to building wealth is because the startup cost is minimal. Most of the platforms require maybe $100 deposit, and you can start buying stocks right away.
Today there's a lot of platforms that you can choose from. You can go on your mobile phone and download an app and set up an account and start investing today. I'm not going to get into the specifics of which type of platform should you have, because there are so many out there and they're very easy to use. I'll put a link down below in the description to give you some ideas to start with, but you got to choose the platform that works best for you. Once you've gone out and you've picked your platform, set up your account, deposit the money in, well, I want to say, now that you've done that, the next thing you have to start thinking about is, what's my goal? What's my purpose for investing these dollars? Do I have a short-term goal? Do I have a long-term goal? Are these extra retirement funds? Or am I saving to buy a boat? What is the thing that you're investing for? You're making these dollars work for you. You need to understand the why behind the investment, because that's going to keep you disciplined in your trading. When you understand your goal, it helps you better pick stocks, because like we're going to discuss here, there's different types of stocks and all of them have different levels of risk and volatility associated with them. You want to pick an investment that is in line with the goal that you have in mind. So let's get into the types of stocks that are out there. So there are growth stocks, there are dividend stocks, there are blue chip stocks, there are value stocks, and there's also speculative stocks. We're going to go over each one of those and what that actually means to you and why they are different from one another.
When it comes to growth stocks, one of the things you want to consider is the volatility that is associated with them. Growth companies typically focus most of their earnings and revenue towards growing the company. Because of this, they do expose themselves to greater volatility. So what that means to you as an investor is basically when you put money into them, you can see the price fluctuate up or down more rapidly than you would in, say, some of the other stocks we're going to consider later on in this video. Growth stocks do present the potential for greater returns, but they also present the potential for greater loss. So you want to be able to research the stocks effectively before you decide to invest. A dividend stock is typically a company that takes its profits or earnings and pays part of those profits out to its shareholders in the form of a dividend. These stocks are typically good for investors that possibly are looking for income because dividends have a tax advantage over interest earned on CDs or bank accounts. So someone looking for income may consider a dividend stock, but also too, someone looking to decrease the volatility in their portfolio may use dividend stocks because the dividend creates a buffer on the downside for a stock portfolio. Blue chip stocks are typically stocks that are household names. So these are companies that most people know. They're large, very large companies, which is seen as stability. So most people will buy these companies because they're good for long-term investments. And the idea is that if the market does take a downturn, because these companies typically have a good track record and they're so large that they will not have as much volatility as a growth stock or speculative stock. Blue chip stocks are, again, the household names most likely. A value stock is typically a security that's trading at a lower price than what the performance may be indicating. Investors typically buy value stocks in an attempt to capitalize on the current lower price of the stock. So that means they think that the stock is going to go up based on the company's performance or potential future performance. Many traders are drawn to the speculative stocks. This is because they tend to be high risk and potential high reward. And a lot of new investors like that potential for gain. Now, speculative stocks also have the downside too as well because it is speculation. So you're hoping that this new company, new drug, whatever it may be, gets approved or goes through and the stock price takes off because you're saying it's undervalued from the price it's at now. Now, the other side of that is one simple thing could cause that price to go completely down too as well. So you must take that into consideration. Typically, a lot of speculative stocks are held by people who want to hold in positions for short-term periods of time, not typically held by long-term investors.